Welcome to an in-depth and educational Elliott wave analysis on Bitcoin covering the 4-hour and a 15-minute time frame. At the end of this video, I will make sure to summarize everything, making it very easy for you to understand what we are looking for, what the highest probability is, but also how probabilities may change with new information coming in. Starting with the first scenario on the 4-hour time frame, which is a double zigzag, WXY, and after wave Y, you look for price to move up and take out the all-time high. The most common target area for a wave Y is between the 1 and the 1.236, a trend-based fib extension taken from the start of W to the end of W to the end of your wave X, giving you a target around 64K to 50.2K on a linear chart. Because if you go to the logarithmic chart, you can see the target is a little bit higher, 68 to 58.6K. And it is important to now at least consider the logarithmic chart as well. So to broaden your target area a little from 68K to 50K, because price has already moved down 31% since the all-time high. And the first common target on log chart is at about 38% to the downside, which is quite significant, and that is also when the logarithmic chart should at least be considered. Of course, a target area of 68K to 50K is incredibly big, but on the lower time frames, right, once a wave B is in and wave C starts, we will be able to be a lot more accurate and make that target area a lot smaller. In this scenario, we are then working on wave A. And as you can see, wave A on my chart is a 5-wave leading diagonal. 1, 2, 3, 4, 5. The reason why a leading diagonal at the moment has higher probabilities than an impulse is because of this move to the upside. Now let me explain in more detail. If your wave X finishes here or finishes here, depending on how you want to count it, doesn't really matter for what I'm going to explain. By all means, you look for a motive wave to the downside in wave A. And a motive wave is either an impulse, 1, 2, 3, 4, 5, or a diagonal, 1, 2, 3, 4, 5. Now, when we think about an impulse, we look for a wave 1, 2, 3, 4, 5, or maybe in your case, 1, 2, 3, 4, 5, right? Now, if this wave 2 ends there, 1, 2, WX, triangle in Y, 2 ends here, or 1, 2, and then move to the down, 2 also ends there. If you take a Fibonacci from your end of 2 to the end of 3 at the current low, you can see that your wave 4, which then is represented by the bounce, touched the 0.618, which serves as an invalidation for a wave 4. It is incredibly rare, unheard rare. I've never seen it. Robert Prechter, when I met him last month, also never seen it. It doesn't make sense to count wave 4s when a 618 is touched. The only way that you can kind of get away with it, I suppose, is if you take the fib from this high and count a wave 1, WX, triangle in Y, that's the end of your 2, and then 3, 4, 5, and then you take the fib from the highest point of 2 to the low of 3. But that is generally not really something that one does. So it's like a little bit like cheating the system. It just doesn't really carry the greatest probabilities doing it like that. Now, because of this, I don't have the diagonal on my chart. And an alternative to the diagonal would be a double 1, 2. 1, 2, 1, 2, very big wave 3 to the downside, then get a 4, 5, 4, 5, right? Now, this is not invalidated. It just doesn't really have the highest probabilities at this particular moment. Now, this move down is then only your wave A. You then look for B, and then another move down in a wave C, right? This would be a lot more bearish because your wave A is going to be a lot bigger than my diagonal scenario. So at the moment, we covered this diagonal. Also, side note, in all of the cases, you still move down. Right, 1, 2, 3, 4, 5, you take out the low, diagonal, take out the low, multi 1, 2, take out the low. So what are we looking for here? Wave 2 is positioned on this high, and there is a reason why it's positioned on this high. Wave 2 in a diagonal is only allowed to be a zigzag family structure. So either a simple zigzag ABC, a double zigzag with an additional xy, right, wxy, or a triple zigzag, another x and another z. We, on the lower time frames, can count this structure to the upside as a zigzag without a problem. We have our wave A, B, C. Very clear, three-wave structure to the upside. But if we want this wave 2 to be bigger and end somewhere here, we would need to count this as a W, X, and then look for wave Y. However, in a double zigzag, preferably your wave X does not touch the 0.7 Fibonacci taken from the start to the end of W, which clearly is touched. Touching the 0.7 significantly decreases probabilities for a double zigzag, but it is not an invalidation. The invalidation is taking this low before taking out the high. But in the end, we trade probabilities, we keep an eye on probabilities, and the fact the 0.7 is touched lowers the probabilities. Now that is the reason why wave 2 on my chart is on the high created over here at about 81.1k. Inside wave 3, we are then looking for a double zigzag to the downside. A, B, C in W. I'll show you this count in a second. Looking for a wave X right now, and then a wave Y to the downside to finish your wave 3 and take out the double bottom. Same here, you don't want wave X to touch the 0.7 taken from the start to the end of W sitting at 79.2k. If you do touch this 0.7, the impact is quite big because it significantly reduces probabilities for a WXY double zigzag in 3, which automatically also significantly reduces probabilities for a leading diagonal in wave A, which then also reduces probabilities for a double zigzag WXY. If you touch that 0.7, the only really wave structure for your wave A would be that double 1, 2, right? Multi 1, 2. 1, 2, 1, 2, and then get 3 down, 4, 5, 4, 5, bounce in B, and then another C to the downside. In other words, lower targets. So let's then zoom in now to this structure. And I want to go to the 5-minute time frame. Right? And then on the 5-minute time frame, I first like to show you how I then counted this move to the downside. It is something that I've done this morning. I got a picture here. I shared this in the Silver membership group this morning, looking for a bounce to the upside. A, B here, and then yellow count, 1, 2, 3, 4, 5 in C. Look for a move towards the upside, which basically is what you see here. Right, so you can see in detail then we have our wave A or wave B touching the 886. Right, common target for B, or at least a target for B. I mean, very common, not very common, but still a target for B. And then we have our wave 1, 2 in yellow, couple of lower degree 1, 2s, and then eventually we get our 4s and our 5s to finish C at the low, and then look for a move to the upside, right? So that is the detail of your wave W in the diagonal. Remember, this is your wave 1, that's your 2, we're looking for 3. 3, W, X, look for wave Y. Now in wave X, we then have a first structure to the upside over here, which, as you can see, counts, or at least looks, like a 3-wave structure. If I count this in detail, then you can see I have a wave A, wave B, and then a 1, 2, 1, 2, 3, 4, 5, 4, 5. Wave C. The probabilities are at the moment highest that this structure to the upside is a 3-wave structure, not a 5-wave structure, which, in other words, increases probabilities to still take out this low, and that's also something that you do like to see in a wave X. However, after an ABC to the upside being a zigzag, you want to see an impulse down if you want to gun for the lows. If you get a 3-wave structures to the downside, and we now took the high, you have to think about other structures like a double zigzag or a flat. Triangle doesn't really work anymore because then you need an A, B, C, D, E, right? Or sorry, A, B, C, D, E. But your C took the high of A, which isn't allowed. So the triangle now, right? This was written before we actually swiped the high, isn't valid. So you then need to think about a double zigzag or a flat inside your wave X. double zigzag, W, X, and then get a wave Y. Or W, flat in X, and then get a 3-wave Y. Perfectly fine, right? A flat is now lower probabilities because price swiped is high. Because in a flat A, B, C, you want your wave B to be a zigzag family structure. It is incredibly rare, some say impossible, to have a flat ABC inside wave B of a bigger flat. And because the probabilities are so low, preferably you do not see this high taken, right? ABC, A, B, and then C for a flat, but we took out this high. So for a flat, you now want to have a double zigzag in A, right? Create a zigzag family structure in B, and then wave C towards the upside. So your wave A is moving from here to somewhere over here, okay? So wave X can be any corrective structure. Starting with a zigzag to the upside opens the door to other possibilities, and then you quite simply have to observe what happens after to get a better idea of what you're looking for. Again, keep an eye on that 0.7 Fibonacci. Then we zoom out again to the 4-hour time frame. This is going to be a long video, but I said it's in-depth and detailed and educational, so I guess I warned you. We have this diagonal to the downside. 1, 2, 3, 4, 5. Now you may remember that we also previously had a diagonal on the chart where we then had a wave 1, 2, 3, 4, 5. But the reason why this one has lower probabilities is because of what happened over here. If you want to count this, your 3, look for 4, and then your 5, right? Then it means, let me just hide this for a second for the sake of clarity and education. Now your wave 3 can be a WXY, right? So Y finishes here, WXY double zigzag structure, right? That's fine. So that's the end of your 3. And then you have wave 4. Now wave 4 has to be in a diagonal, a zigzag family structure. So either an ABC or a WXY. But this is your ABC. Look how small it is. And a double zigzag WXY, as explained earlier, has lower probabilities because your wave X touched the 0.7 taken from this low to the high, which is your W. So therefore, probabilities decrease for a double zigzag, which means a bigger structure in 4, because this little thing is incredibly short to counter the wave 4. The ratio is very off. Look at your wave 1. Look at the size of your wave 2, how big it is. Not necessarily in time, but how big in price, right? Look at your wave 3. Is this wave 4? Not on my chart, right? That's very low probabilities. So with that then in mind, we switch some things around, right? I just press Ctrl Z probably. There we go. And then we get to this diagonal. Now we have covered this one as well on my chart several times. So this is your 1, 2, 3, 4, 5. Theoretically, you can end your wave 5 at this low, and then that's it, right? That's your low, and you now look for price to move towards the upside, create a bigger bounce. However, preferably, if we really want to change a trend and move towards the upside, we want to start with a motive structure, an impulse or a diagonal, maybe a multi-one too. However, as explained earlier and shown earlier, this move to the upside counts better as a 3-wave zigzag structure. You cannot count a valid impulse in this move to the upside. You cannot count a multi-1-2 over here. The only potential bullish scenario is a diagonal, which is then this one over here. This scenario, 1, 2, 3, 4, 5, can be a wave 1 or a wave A, for then a 3-wave B or 2, and then move up and continue to higher prices. But we have so much time left for a diagonal to form. At the moment, it doesn't have the highest probabilities. You still need a wave 3 to take out this high. Then you still need a 4 and still a 5. So once we have our 3 and we move down in 4 and we kind of confirm a 3-wave corrective structure to the downside, that's the moment where we can really start talking about the potential for the bulls to move price to the upside and look for a finished structure here, right? But at the moment, the probabilities aren't too great. So therefore, it makes more sense to extend your wave 5, right? As long as that diagonal is not at least close to completion, and then you get this, which now means that inside 5, you have ABC, W, X, and then look for Y. Invalidation 70.2K because your wave 5 is not allowed to be longer than 3. This is a one-to-one trend-based fib extension taken from the start of 3 to the end of 3 to the end of 4. Okay? Now inside your wave 5, we are then working on this wave X. W, X, right? And then wave Y. Preferably this X is a little bit bigger than the diagonal scenario, right? But wave X. Okay. So now let's then look inside this wave X, go to the 50-minute time frame and check what is possible over here, okay? So we zoom into this diagonal, 50-minute time frame. We go to this range here. We are looking for two options, either a W, X, Y inside that wave X, remember, or we look for a flat. A, B, C, alternatively, A, B yet to be made, C to the upside, okay? I'm going to cover both of these options, starting with the WXY. Your zigzag to the upside here is your W. Then wave X is this ABC down, as shown earlier. Now, because your wave W is a zigzag and your wave X retraced more than 70% of wave W, probabilities for a double zigzag WXY are low, meaning that in this scenario, wave Y preferably is a flat ABC or a triangle. And side note, because wave X moved all the way below the 0.7, right, and wave W is a zigzag in a sideways WXY, which now is increased probabilities because price moves so deep, a zigzag isn't even allowed. Wave W and Y can't be the same structure. But nonetheless, for wave Y, preferably you have a flat ABC or a triangle. Now a triangle here doesn't actually work anymore inside wave Y because of this wick, okay? Because a triangle preferably ends with wave A here, wave A being a simple zigzag 535. It is incredibly rare to have a wave A that is a double or triple zigzag. In the book, Elliott Wave Principle by Frost and Prechter, they don't even mention wave A as an option to be more than a double or a simple zigzag, right? So they say the highest probability corrective wave in a triangle that is a double or triple zigzag is a wave C. It doesn't say wave A can't be it, but it's just very rare. And also from my experience and very likely yours as well. So because over here we have an ABC, if we want to label this A, then we need B, C, D, E, but we took the high invalidation. We don't want to count a WXY in a wave A, so therefore the triangle, low probabilities. Now then we are stuck with the flat. For the flat, we need a three-wave structure, A, then get a three-wave zigzag family B, and then a wave C to the upside. Grab the liquidity below the double bottom, swing failure pattern, or at least short time spent here, and then move back towards the upside. Now, what do I like to see? Right? I like to see a local low time frame, 1, 2, 3, 4, 5 to the upside, get a corrective three-wave retracement, right? Maybe some bullish CVDs as well, and then look for price to move up, and then we want to see wave 3, and then eventually 4, 5 to finish an impulse for this flat ABC in wave Y, right? Now, I already showed you this. This is then the sub-degree count that we have in X at the moment, right? And an alternative X is X moving down. So then you have W over here. This becomes W, X, Y, double zigzag, right? And then you move up in a wave Y again. But preferably, or at least it's less common for wave X to take out the origin of your wave W. The moment you take out this low, you preferably start talking about flat structures. So this is actually the flat in wave Y, shown in more detail. I forgot I had it, but A, B, and then your wave C. Now, the moment you take out this low at 74K, right, then preferably you count a B and then look for C back towards the upside, okay? But at the moment, price is ranging here. This is a low, and it is low enough for a wave B in a flat. A, B, and then look for C. 0.9 is touched, which is a minimum requirement for wave B in a flat. However, C has to be an impulsive move. This move counts very three-wavy. So there we go again. We then need a diagonal, 1, 2, 3, 4, 5, correction, and then get your wave 3, 4, 5, finish in the target area, being 81.3 to about 83K, which is actually an interesting level, right? Alternatively, multi 1, 2, 1, 2, 1, 2, maybe another 1, 2. The problem with the 1, 2s, however, is that your second wave 1 here is a lot bigger than your first wave 1 in time and price, and your second wave 2 is a lot bigger than your first wave 2 in time and price. And it lowers the probabilities because of Elliott wave degrees. Preferably your first 1, 2 is your biggest structure in time and price. And then a lower degree count is preferably a little bit smaller in time and in price, which is not the case here, right? It is not a rule that it has to be like this, but it's more like a guideline. So, therefore, when we think about a flat, it would, in theory, except unless this becomes a diagonal, be interesting to take the double bottom, get your B, and then move towards the upside. Common target for B in that case is taking a fib from the origin of A to the end of A, get the target on, which is 72.8K to 71.8K. Now, in this area, it just so happens that we have some support on a daily time frame, which is this over here. On the daily, golden pocket linear chart, 72K. And of course, the previous all-time high with some other highs here as a support resistance area. So just something to keep in mind, I suppose. Okay. Now that means, if we zoom out again, that inside the diagonal, where we have our wave X, right, on the 15-minute time frame, we are either looking for a WX, A, B, C, and Y, right? Alternative WXY, but low probabilities. So WX, A, B, C, and Y, okay? Triangle doesn't work anymore here. Or a flat, A, B, and then a wave C towards the upside. Either B finished here or B takes out the low, right? Whatever. Then we have the 4-hour time frame. Bullish scenario, already covered this earlier, right? And then we have the most bearish scenario. I actually got a question about this recently. So I put it on my chart. This is the scenario to hell, basically. A multi 1, 2, 1, 2, 1, 2, and then more 1, 2s. Low probabilities, a lot of 1, 2s are stacked here, right? Like having a double, triple 1, 2, right, on such a time frame is okay. But now you're talking about 1, 2, 3. This is then 4 1, 2s now. It's not like, of course, you see like 4 1, 2s, right? You can get a couple of 1, 2s here and then many 4 5s, no problem. But we're talking about high time frame now. And your second wave 2 is longer in time than the first wave 2. Your second wave 1 is bigger than the first wave 1 here. It's not invalidations, but it does impact probabilities. And in this case, no support to the downside will hold. You go down, far down, poof, and then get your 4, 5, 4, 5, 4, 5. Every 1, 2 needs a 4, 5. And that would only be your first structure. Because if this is a 5-wave impulse, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, 4, 5, this is only a wave A. You then need a massive B, which basically by itself is going to be considered as a bull market. And then you look for wave C down and you basically go to 0. So let's hope this scenario doesn't comes into play. It's at the moment low probabilities. I just want to have it on my chart covering everything in this video. Then we get to the news at the moment. So Wednesday, 8 p.m., Thursday, that's tomorrow, and then Friday, right? You can see the news, Central European Times, these ones, so trade safe. And then we get to the conclusion. On the 4-hour time frame, these are your polylines, okay? Probabilities are actually quite simple. There they are. So from a probability perspective, we look at a lot of information. It's a very long video, but the probabilities are simple, right? Elliott waves gives you a very good directional bias. No need to know exactly what scenario is up, right? Very often people think scenario A is going to be it, but then price action changes and it's not going to be it. But your initial direction might be correct. So generally it's more interesting to think, are we going to take out the low as a higher probability or take out the high as a higher probability, right? In other words, at the moment, is the low in as a high probability, or are the probabilities higher to still take out this low? Probabilities at the moment on the 4-hour are higher to still take out this low as per the analysis. Therefore, from an Elliott wave point of view, locally, it is more interesting, right, to look for price moving down, meaning shorts in this local range, unless a diagonal would form for the bulls, which is this gray line over here, right? You can see that in white, we have the WXY double zigzag. This is your diagonal wave A. So we look for price to then find support down here. I'll show some of my supports in a second. Also, if we look for the more bullish scenario, being the diagonal on the 4-hour time frame, right? Then you look for wave X and wave Y. So that is also a bounce in a similar area, right? Maybe the diagonal moves a little lower, but it's still quite similar. And only the move up diagonal is basically bullish. And then you have the one that goes down, right? That's your fire pit scenario. So keeping this in mind, on a 4-hour time frame, my areas of interest, where I am interested for at least the potential of a little bit of a swing, let's say, right, would be this green box, 72K to 67, and the red box for a move down being 81 to about 84, right? A diagonal could top here. Your wave X can top there. Even your wave B can top there as well. Now, it's an area of interest, which in my way of trading means that that's an area on a 4-hour time frame where I will observe the reaction. And then based on what I see locally, and I do recommend this to everyone instead of trying to catch knives. If you have a good plan catching knives on with order flow and tick charts and whatnot, low time frame stuff, right? If that works for you, swing failure patterns, then that's good. I know it doesn't work for me. So I like to wait for a bit of a reaction, get a retracement, la-di-la, get some information, and then I make my decision. But knowing your areas of interest is just as important because it avoids you to be part of random shit on lower time frames if that's not your style, right? You just wait. If price is going to hit your area, interest is activated, see what happens, maybe take a position, maybe not. Now, in these areas of interest, they are chosen. We have some additional support and resistance. So let's just keep the probabilities on. But to the upside here, we have this blue box, 83.3K, 84K, which includes a weekly naked point of control at 83.5K, right? Above this box, yeah, we do have some levels above the weekly naked point of control, above this box here, as you can see. But these levels to me are not as significant. The weekly naked point of control is definitely the most interesting one. So if price can move up, right, and this is also part then of my area of interest, as you can see, right? Price moves up. I want to see a good rejection and preferably, of course, an impulse corrective move up. And that's then your entry, maybe some nice bearish CVDs, whatnot, right? That stuff that is what I'm looking for, what I'm interested in. Elliott waves together with some of my other tools. Now for the bulls, right? Bulls lower probabilities. They need a bullish diagonal, move up, get a diagonal, then retracement, then continue. Right, so you got to push through this, take out these highs. To the downside, support, I mentioned earlier, the golden pocket, which is between 72K and 69.5K on a linear chart, taken from the 49K low to all-time high. We also have support resistance here with the previous all-time high, 73K to about 69.2K, multiple highs, right? However, what I like is some horizontal support as well, not just a FIP and a support resistance area, but I do actually really like the volume levels, right? So your point of controls, for example. And you can see that the first area is then 68.8, which is where this blue box starts. Now, I wouldn't be surprised if touching the golden pocket, especially if you get a flat, for example, would lead to a reaction. I'm just not so sure if that then would be your low, but hey, we'll observe it and see what we get, right? So that is the support. First real like nice area for me, the blue box to the downside, 68.9, 67.4K. Now, what I want you to be mindful of locally in this range is the bullish CVD divergences. Quick refresh over here. Lol. So bullish CVD divergences here. All right. These ones here played out. That was earlier because this high got taken with this wick. The bullish CVDs here played out. You can see this bullish CVD. This bullish CVD here is a little bit less interesting to me. By the way, if you don't know what CVD is, it shows absorption of market shorts with limit long orders. That's what bullish CVD shows. So there's absorption here of shorts, market shorts with limit longs, and price moves up. Now, this CVD, right, the bigger one, is a little less interesting because price retraced so incredibly deep here, touching the 886 FIB, taken from this low to that high. However, if you do continue moving up and continuously build some more bullish CVDs, which at the moment we don't, we only had this one, we don't have new ones here, then you have to be aware that it might activate this one and take out the high at 81.1K, which honestly would be quite interesting to bait some longs. But at least be mindful of the CVD divergences. Interesting resistance, 83K, 68K support. Psychology perspective, I just like to add this. We are currently in this range. Price has been moving down and down and down and down. I have no idea where the greed and fear and greed index is, but probably it's pretty low. I wouldn't mind seeing a little bit of a bait locally, like baiting longs into maybe we get like an impulsive structure up, but then we take out these lows because the probabilities remain higher to take out these lows. Of course, 83K, interesting resistance. Maybe that's the bait, right? That's the bait. Make a low, impulse to the upside. People think, oops, the low is in, but then instead we count a flat here. That's your wave C. You move down again. The early longs are stopped out or liquidated. Then you grab that liquidity and then you actually get your bounce to the upside. From a psychology point of view and bit of like market maker perspective, that would actually be very interesting, right? Now, if this was a very long video, one of the longest on the channel, I bet, but hey, I warned you. If you have any additional thoughts, any ideas, make sure you comment your thoughts below. I always reply to all of my comments, so I'm happy to discuss other stuff. And maybe in a live stream, we can go over your scenario, your screenshots, post them in Discord, tag me, whatever, and we will see. So, that being said, thank you for staying so long. If you watched this whole thing, I really value your time. And if you just skip to the end, I still very much value your time. And thanks for checking out the video, checking out the probabilities as well. Hopefully you learned a thing or two if you watched the whole thing. And yeah, thanks for watching. Hopefully you found this video helpful or valuable. Please check out the CVD indicator video. It is the best indicator out there in my opinion. Or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.